Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close out with some final thoughts on today's session. Gold, of course, has to be mentioned. Prices breached $4,200 an ounce for the first time ever today. We've seen these trade tensions reignited in the past few days, giving investors even more reason to hedge their long equity bets by diversifying into gold. That has led gold to surge nearly 58% this year, driven by several factors, those geopolitical tensions, rate cut bets, central bank buying, de-dollarization, as well as strong ETF inflows. We also saw silver climb today, but it is still slightly off of the all-time high of 53.60 that it touched yesterday. And we heard from Federal Reserve Governor Stephen Miron today. He warned that the renewed U.S.-China trade frictions, particularly China's move to restrict rare earth exports, represents a fresh downside risk to economic growth. He argued the Fed should move more aggressively toward interest rate cuts in order to reach a more neutral policy stance more quickly. Miron saying the current policy setting is overly restrictive and said that it left the economy vulnerable to shocks. He also downplayed near-term inflation risk differing from commentary we've heard from other Fed governors and said that softer inflation gives the Fed room to act right now. We did learn from the last FOMC meeting minutes that Miron was a dissenter, preferring a half-point cut rather than a quarter-point cut that the committee ended up adopting. And those trade tensions continuing to mount alongside the absence of this government data in a shutdown that is still now entering its 16th day as of tomorrow, Sam, with the failed funding today ahead of the Fed's October 28th meeting. So a lot to take in there from these Fed speakers, but what caught your eye during today's trading session?
Well, Marley, away from the trade tensions, there were actually some important corporate stories related to China today. So Apple is going to invest more in the country at a time when we're actually seeing America Inc. approaching with cautions because of that trade war, and that hasn't stopped CEO Tim Cook, who's in China this week, meeting with officials and promoting the release of the new iPhone, which was delayed in China to prepare carriers for the eSIM technology, which China has been a little bit slower to adapt to. But not clear about the size of this investment, but it shows Apple's commitment, no doubt, to this market. Then we had LVMH shares making their biggest jump since 2001, thanks in part to China. Overall, the company posting a surprise return to sales growth. The Q3 revenue rising 1% after 2 quarters of declines and beating analyst expectations across the board. The company saw improved demand in China, which also turned positive in the quarter. Christian Dior, Kering, Moncler, and Burberry all moving higher on these encouraging numbers. But a warning about China coming from Dutch semiconductor equipment maker ASML, saying it expects to see demand and sales in that market to come off significantly next year compared to 2025 and 2024. The company's third quarter earnings report was mixed, with a profit beat and a revenue miss. Even with more cautious of an outlook, though, ASML continues to benefit, no doubt, from the investments in AI, given it's got a near monopoly in the lithography machines that it makes. Heading into tomorrow, Marley, what will you be looking out for?
Oh, we've got Taiwan Semiconductors numbers coming out overnight, so definitely eyes on that. Investors looking for continued good news from the world's top AI foundry. Consensus estimates for revenue is $966.96 billion. Earnings expected to come in at $15.64 per share. Full year revenue expected to be $3.7 trillion on earnings of $60.24 a share. Of course, Taiwan Semi's biggest customers are names that you're very familiar with: NVIDIA, Apple, Broadcom, Qualcomm. Also of note, Susquehanna raised their price target to $400 for Taiwan Semi, up from $300 last week, because Taiwan Semi reports their monthly sales numbers. They reported a 31.4% increase in September sales year over year, and the run rate from January to September was 36.4. So really impressive numbers that will come into play in this quarter, but lots of eyes will be on Taiwan Semi, trading at 209 right now, up 3.2% on the day. How about you, Sam?
Well, obviously now that the big banks, Marley, are out of the way, as we got some nice beats across the board, we will hear from some of the regional names tomorrow, like First National Bank. Analysts say the focus now for investors for some of the smaller lenders will be on net interest margins, the NIMs, and also credit cards. So this should give us a much broader look at the economy right now. And the story of the big banks was certainly one of consumer resiliency. So let's see if that's the case at a regional level as well. We saw of want to know how consumers are spending and how they're taking on debt for the smaller lenders. We've also got more Fed speakers on the docket tomorrow, so we'll hear from Myron again. We're also going to be hearing from Waller, Barr and Bowman. So the markets are pretty much pricing in that a 25 basis point cut this month is a done deal. And as you said, Marley, Myron made some arguments today that with tensions with China, that's just building the case for more urgent rate cuts. So let's see what they all say tomorrow.
Yeah, we're all eyes and all ears on Fed speak right now in the absence of data, but that's going to do it for us today on Market on Close.